Interest rates are still low by historical standards, and they remain just below the range of estimates of that level that would be neutral for the economy, that is, neither speeding up nor slowing down growth.
Did the Fed chair just do a complete reversal, or as Neil Cavuto first put it, a 180? And why? We bring in our floor show traders. Teddy Weisberg, give us a sense of why you think he made such a big turnaround in his comments and what it really means and whether he should have if the economy is as strong as it is.
Well, you know, reading the tea leaves and all the political pressures and rhetoric that come out of Washington, that have a lot of which has been directed at him, one can only wonder if, in fact, he's gotten the message. You know, maybe they have simply reevaluated where they are. I think the overall direction for interest rates is probably still higher, but clearly he has sort of indicated that we're maybe on hold. I don't know, and perhaps they see something that we don't see. Clearly the market has been concerned, whether it's a slowing economy or it's been the direction of interest rates. But other than today, you know, if we had had this conversation yesterday, I suspect we wouldn't have had so many smiles.
Yeah, you know, I'm looking at my sector stocks. There is so much green on the screen. There isn't one entire sector that's red. You know, usually if everything's up, the utilities might be down. We're not even seeing that. While they are up, they're not certainly down, and that to me is significant, Larry. And you've got to wonder, if everything is so strong, why did he signal it this way? I would love to know your opinion on that, because we know that President Trump has been extraordinarily vocal about how furious he is at the prospect of the Federal Reserve raising rates in this atmosphere. And this atmosphere is pretty strong, right?
Yeah, it absolutely is. And really, it's policy making by thesaurus, taking a line from Ben Bernanke. I think really when you look at history, it'll tell you the story. March of 2014, Yellen made the same mistake by saying the Fed's going to probably raise rates in 6 months or that type of thing. The markets dropped 1% in 10 minutes. How about Bernanke in 2006 at a very private ceremony told a news anchor or a journalist that if the markets think that we're done raising rates, they're wrong. You know, unfortunately, the policy is being run by a thesaurus, as it were. Think of considerable, the thing that the word Greenspan used, that the Fed hated. They dropped that in 2004, I believe, and after that we saw 17 rate hikes. So I think right now, what's happening is that the Fed is being very deliberate, always has, and he just made a rookie mistake and going back to the thesaurus and saying words that are true and what will resonate with the investor.
But, Scott, now we have an 82% chance that we will see a Fed hike in December. It would be very bad, I think, if he shocked the market by saying, nah, we're not going to do it in December. But what do you expect for January? And shouldn't we, at this point, if we're going to see a recession, like so many people say, in the next couple of years, and that's normal, right? We've had 11 recessions since 1945. They happen. Doesn't the Fed need that tool, the ability to drop rates enough to stimulate the economy? And if we're still too low, they can't do that.
You're right, Liz. They absolutely do. And, you know, come next year, I think all bets are off right now. You know, the 80% that's priced in for December right now, I actually think it's about 98%, quite frankly. Moving forward, though, we really have to see what comes out of the retail out of the holiday season. Let's see how strong the consumer is. Okay. Are they going to keep up what we've seen over the last week since Black Friday and Cyber Monday? Is this holiday season really going to be as robust as everyone says? Now, that moving forward, we also have to see what happens with China, what happens with tariffs, because as we've seen, and remove the Fed out of it, as we've seen, some of these big multinationals are starting to take a little bit of a hit because of tariff talk and because of the impact that may make. So all of that is still baked in, and I think that come January, all bets are off right now as to whether anybody can predict how the Fed is going to react, whether we're going to raise 1, 2, 3, or even 4 times next year. And you mentioned tariffs. That is going to be the total focus of the G20. I'm leaving tonight for Argentina. I'll give you guys all the scoop. I'll text you. I'll let you know, and then I'll let our viewers know for sure. Good to see everybody. Thank you very much.